share my screen. Are my slides visible?
Yes, Ayushi.
Okay, thank you so much, Mon. So hi everyone, good afternoon, good morning. Today, Mon and I are going to present the introduction to the 2025 system of national accounts. That's the new national accounts framework that we're eventually moving towards. There are already some updates on 2025 that are available on the UNSR website. So Mon and I have tried to give you a brief introduction in today's presentation of the 2025 SNA, and we will also be focusing on some of the topics tackled in 2025 SNA. Until now, we had been following the 2008 SNA framework, and the 2025 framework that we're moving towards is a new update to the manual, and it will include some new topics as well as revisions for some previous topics that are included in the SNA. Um, just to give a brief background and historical overview of the system of national accounts, the main objective, as we all know, is to provide a comprehensive conceptual and accounting framework for compiling and reporting macroeconomic stats for analyzing and evaluating the performance of the economy. The origins of the SNA trace back to the 1947 report of the Subcommittee on National Income Statistics of the League of Nations Committee of Statistical Experts. In the first session in 1947, the UNSC emphasized the need for an international statistical standard for the compilation and updating of comparable statistics in support of a large array of policy needs at that time. Um, the 1953 SNA was then published under the guidance of the UNSC, and it consisted of a set of six standard accounts and a set of 12 standard tables presenting detailed and alternative um, classifications of the flows of the economy. The concepts and definitions of accounts presented in the 1953 SNA were widely applicable for most countries, including developing countries, and two slightly modified editions of the 1953 SNA were published. Then the first revision in 1960 was proposed, which reflected comments on country experience in the implementation of the 1953 SNA, while the second revision in 1964 improved the consistency of the SNA with International Monetary Fund's Balance of Payments Manual. Then in 1968, the SNA manual published extended the scope of the national accounts substantially by adding input-output accounts and balance sheets, and it paid more attention to constant prices and made a comprehensive effort to bring the SNA and the material product system, that is the MPS, closer together. Then in 1993, there was a major advance in the national accounting framework, and it embodied the result of harmonizing the SNA and other international statistical standards more comprehensively than the previous versions. And then the 2008 SNA, which is an update of the 1993 SNA, addressed issues brought about by changes in the economic environment as well as advances in the methodological research and the needs of users. And now the proposed 2025 SNA framework will be talking about some new topics pertaining to contemporary themes like globalization, digitalization, among others. And the consultations for various topics within the framework are still ongoing among the advisory expert groups and the task teams for specific topics. So this is a snapshot of what the project management page of 2025 SNA looks like. It contains detailed documents pertaining to the administrative procedures for updating the SNA manual, the progress updates, as well as the minutes of the meetings of the Intersecretariat Working Group. And the link has been provided in this presentation for you to go through. So you can click on these different PDFs and actually see the detailed discussions as well as updates with respect to various topics. And these pages are regularly updated as soon as the meetings take place. So, yeah, it's a great resource to explore further into the framework. The 2025 SNA also aligns with latest themes and issues that all of us have actually dealt with already in some capacity. As the global economic landscape has evolved considerably since 2008, it also necessitates an updating of the standardized system of national accounts to maintain measurement consistency for new production arrangements as well as environmental considerations. The new update will address a vast range of issues such as globalization, digitalization, well-being, and sustainability, which will address topics like household income, wealth, and also economic accounting. There's also going to be a coherent framework for measuring informal economy, a new framework for measuring Islamic finance, since it does not operate in the same way as conventional finance. And this framework will also address some new guidelines on communication while accounting for the wide range of developments in this field since the last update of the manual. And it will also address other financial issues for financial corporations, general government finances, etc. This is an annotated outline of the proposed 2025 SNA manual, and you can see here some of the new chapters that have been added with respect to some of the topics that we just discussed. Besides these new chapters, the existing chapters will also allude to some of the new topics and also include revisions in their respective frameworks. As mentioned before, the Intersecretariat Working Group will be assisted by the Advisory Expert Group on National Accounts, and these groups will be overseeing the overall update of the 2008 SNA. They have adopted a three-pronged approach for the update of the manual. The first one being undertaking technical research in priority issues and experimentation and testing of selected recommendations. So, to address the new issues, a series of guidance notes are being developed and dedicated task teams are established to undertake the technical research and draft the guidance notes. This time, the research component of the update of the 2008 SNA also includes a key feature that is the explicit inclusion of an experimental or early implementation component for some recommendations in the guidance notes. Um, the second approach is to engage in a broad consultation on the issues related to the thematic areas. This component will constitute several rounds of interactions with various groups of stakeholders, such as compilers, policymakers, academicians, and even private sector through global and regional webinars and forums. These webinars are also available if you explore the SNA 2025 page on the UNDESA website. Then the third approach is to ensure overall consistency with other statistical standards in the system of economic statistics. For overlapping issues in the research agendas identified for SNA, BPM, GFS, etc., the task teams were established consisting of subject matter experts from relevant committees of experts as well as other groups. So, as I mentioned, the guidance notes are being developed for various topics, and these are some of the new guidance notes that are being prepared, which are segregated by topics. And these are quite relevant to the work that we do now. For example, in the case of digitalization, the guidance notes include notes on goods and services affected by digitalization, crypto assets, digital SUTs, using AI for national accounts. So these topics are quite relevant, especially for those members in our team who are working on digital economy. Similarly, for well-being and sustainability, it includes several interesting topics like the treatment of unpaid household work, as well as the treatment of emissions. So again, the respective teams working on climate and environment accounts also may want to have a detailed look at these guidance notes. Then there are also guidance notes for globalization, communication, and financial issues. Within globalization, today we will be looking at the guidance notes for valuation of imports and exports as per the international standards. Then the list continues with guidance notes on informal economy, which will be discussed by Mon in the second session of the presentation. And then there are guidance notes on Islamic finance, VOP, current account, and other issues. So, yeah, like I mentioned, it would be very useful to go through these guidance notes, especially for the teams working on those specific topics, so that we can already start to realign ourselves with the updated frameworks. So let's begin with the guidance note on globalization, and in particularly this one will talk about the valuation of exports and imports of goods in the international standards, and it also alludes to the treatment of CIF to FOB adjustment while valuing imports for SUTs. The main issue that the new update is trying to address is primarily that the FOB valuation of imports and exports and the basic price principles of SNA are actually different in their treatment of freight and insurance services between exporting and importing countries. So, while this may not be very clear at this stage, in the following slides, we will try to break down this problem and understand this issue in more detail and also see the solutions to this problem suggested by the globalization task team. Just as a brief context, this is a snapshot of the 2020 version of the Incoterms, which is short for International Commercial Terms issued by the International Chamber of Commerce. These terms define the basic rules of trade and are internationally accepted terms of contracting between a buyer and seller, and they highlight the responsibility of each stakeholder as well as the principle of transfer of ownership and risk. The specific contractual arrangements tackled in SNA with respect to exports and imports would be CIF and FOB, that is cost, insurance, and freight, and free on board. So in this context, we can see how these are utilized for SNA. But before that, let's see where this data is actually coming from. In most countries, information on exports and imports of goods comes from customs declarations. Within customs declarations, exports are valued at free on board or FOB at the point of exit from the exporter's economy. It includes the cost of transport from the exporter's premises to the border of the exporting economy. So in this case, it would include the cost up to the port of loading of country A itself, given that country A has the exporter. Then imports are usually valued at CIF, that is, they include cost, insurance, and freight at the point of entry into the importing economy. This means that CIF would include all the transport costs up to the point of entry into country B, which is the importer economy. This valuation is standard, and regardless of the actual contractual arrangements between the two parties, the imports are valued at CIF and exports are valued at FOB in customs declarations. This valuation also excludes the cost of transport from border of the importing economy to actually the premises of the importer B. That is when the goods land in at the border of the importing economy. These valuations do not include the cost of transporting those goods from the border to actually the premises of the buyer. This transport actually may be provided either by a resident or a non-resident carrier. The CIF and FOB valuation principles also arise from the common situation where goods are transported by ship from one country to another, and it's based on the assumption that the transport to and from the ship in each of the respective countries would be undertaken by carriers resident in their relevant economy. So Given this, both the 2008 SNA and the latest or the sixth edition of the Balance of Payments and International Investment Position Manual, or the BPM 6, recommend recording international transactions in goods crossing borders at free on board, or FOB, at the customs frontier. Why FOB? This is because in international accounts, the valuation of exports and imports of goods is a special case where a uniform valuation point is used, namely the valuation at which the customs frontier of the exporting economy, which is the FOB type valuation. So using FOB brings about consistent valuation between exporter and importer and also provides for a consistent basis for measurement in cases where parties may actually have a wide range of different contractual arrangements, such as X works, one in which the importer is responsible for arranging all transport and insurance, to arrangements like delivery duty paid, where the exporter is responsible for arranging all transport arrangements. Um, but since imports data is sourced from the International Merchandise Trade Statistics, which record imports at CIF, the imports in the supply and use tables are also recorded at cost insurance rate value, as they are, as that is the value recorded at the border of the importing country as per customs declarations. So, if the disaggregated CIF figures are used for imports of goods, then imports of transport services and insurance would be double counted, as that part of the transport cost and insurance would have already been included in imports of services, and they would also be accounted for in CIF value of imports. Therefore, a CIF FOB adjustment at macro level is required to arrive at the required FOB value of imports, and an adjustment column for this is usually added in the supply table. So we just saw in one of the previous slides that CIF FOB valuation principles arise from the common situation where goods are transported by ship from one country to another, and it is based on the assumption that transport to and from the ship would be undertaken by carriers resident in the relevant economy. However, imagine a scenario where goods are directly transported by land between two economies that have a land border. And in most scenarios, it would actually be a single vehicle that would transfer the goods from seller to buyer. In this example, we cannot directly assume the points of change of ownership or transfer of risk, as that would be very specific to the actual contract between the two parties. The ownership could change from the moment the goods leave the seller's premises, or it could change the moment the goods enter the seller's premises. It depends on the moment the goods enter the buyer's premises. It depends on the contractual arrangements between the seller and the party, where the ownership, where the change of ownership will occur and where the transfer of risk will occur. So therefore, in this case, where this is a case where the FOB valuation of exports may actually significantly differ from the change of ownership principle. So this particular point of inconsistency within the SNA is highlighted here when we talk of transactions between a buyer and a seller in the same economic territory. The SNA recommends recording those transactions at actual prices or the actual values listed in the invoices of those transactions. However, in the case of economic transactions between different economic residents, SNA and BPM 6 recommend using FOB values at the time of border crossing. So we can also try to understand the implication of this distinction through an example. Imagine that there is a seller A and buyer B. A sells $200 worth of goods to B. The cost of transport is 10, and there is a 10% tax on both the goods and the transport, implying a $20 tax on goods and a $1 tax on transport. So we can see how the different contractual arrangements between the buyer and the seller can affect the basic prices, producers' prices, as well as the purchasers' prices. So in the first scenario, we assume that A and B are residents of the same economic territory, which means that through business surveys, usually we would have complete information available about the contractual arrangements and the actual transaction prices between A and B. Assuming the case that both A and B have delivery fleets that can transfer the product from A to B, or they may use a third party C to make the transfer, there can be six possible contractual arrangements between A and B, and the entries in the use matrix will be different for each of these cases. When A charges B an all-inclusive price and uses own delivery truck for delivery, the transport will be treated as a main or ancillary activity of A, wherein the cost of transport will be A's intermediate consumption and the tax paid will include both tax on product and tax on transport. This is also according to the principle of SNA that states that if the producer agrees to deliver the product to the purchaser without any explicit charge, the cost of delivery is included in the basic price. And as you can see here, the basic price includes the cost of transportation as well. So in this case, the cost of petrol and other consumables will also come in A's intermediate consumption, including wages paid to truck driver as compensation of employees, and the usage of delivery truck will be recorded as consumption of fixed capital. In the second case, when A charges B for delivery and still delivers using own delivery fleet, transport is treated as a secondary activity of A. Here, the invoice will make a distinction between basic price of the output, that is 200, and it will account for an additional transport fee along with transport tax. But even in this case, the producer's price still remains the same as case one, that is 231. And A's intermediate consumption from using the delivery truck, compensation of employees from consumption of from the wages paid to the driver and consumption of fixed capital due to using the delivery truck would still be recorded in A's accounts. Then in the third case, we consider a situation wherein A charges B an all-inclusive price for delivery, but uses C as a delivery agent. So in this case, since A is charging an all-inclusive price, the basic price and the tax will remain the same as case one, that is 210 and 21 respectively. The difference will be that A's intermediate consumption now will not include other costs such as petroleum costs or delivery truck driver wages, etc. Um, as those services in this case are provided by C. So C's production, that is C's provision of transport services, are actually A's intermediate consumption. The fourth case is similar to the second case, where delivery is assigned to C and B is charged separately. Again, the basic price would be 200. The tax on production would be 20. Transport and tax on transport would amount to 11, which would make the purchaser's price to total up to 231, same as all the three cases above. Again, in this example, C's production, that is the delivery services that C is providing, are treated as A's intermediate consumption. However, in the fifth case, the situation is slightly different, wherein we consider the case A is where B is responsible for collecting the products from A, but B uses their own delivery truck. So in this case, the that B will pay to A will include the cost of goods and the tax on goods, which amounts to 220, which is also the producer's price in this case. But since B is using their own delivery truck, there is no additional transport services being used by B, and therefore there is no cost of transport and subsequently no tax on transport. Then in the final case, we consider the situation where B collects the goods from A, but this time using delivery services from C. So here B is actually buying two products, that is goods from A and services from C. So consequently, B pays 200 plus 20 to A and 10 plus 1 to C. The rationale behind these different recordings is that the point when change of ownership occurs is different under different scenarios. If A agrees or is obliged to provide transport to B, even for a charge, then change of ownership takes place when the product is delivered to B's factory. That is in the first two cases. If B agrees or is obliged to arrange delivery for itself, then change of ownership takes place when the product leaves A's factory. That is in the last two cases. And these were the possible outcomes when A, B, and C are all residents of the same economy. So, as you can see, there is complete information available about the transactions that are taking place in the case of these domestic transactions, which enables us to record the prices of goods and other services accurately. But let's now consider the case where A and B are residents of different economies, and C can be either a resident or a non-resident of either of these economies. In principle, the analysis for goods transported within the domestic economy is likely to also apply for international transport also. So when the supplier or the exporter commits to deliver the goods to the importer, the value of goods will include the transport costs. When the purchaser, on the other hand, when the purchaser or the importer is responsible for transport, the value of goods will exclude the transport cost, and these would instead feature as a separate purchase. Whichever of the units takes responsibility for the transport, the value of the goods for both the exporter and importer are identical. This is an important distinction from the valuation used in the customs merchandise trade statistics, which value imports at CIF and exports at FOB. So, following the previous example, if A and B are resident in different economies, whenever A takes the responsibility for delivery to B, the value of exports from A and the corresponding value of imports by B include the cost of transport. However, if B takes responsibility from transport from A, then neither the value of exports from A or the value nor the value of imports into B include the value of transport. So then there are more cases that we can disaggregate when C is used to undertake the transport. So if a third party C is used to undertake the transport, the residence of C is very important in determining the value of total imports and exports. So in this scenario, there are three possible residence options of C. That is, first is C is co-resident with A, then second would be C is co-resident with B, and the third option is that C is resident in another country. That is, it doesn't reside in A or nor in B. So if C is co-resident with A and provides services to A, this is a domestic transaction within A's economy. However, in this case, the value of the exports of goods from A will reflect the fact that they must cover the cost of services brought from C. If C is co-resident with A but provides services to B to transport the goods from A to B, then C also provides exports to B, but these are shown as exports of transport services, not of goods. Then, if C is co-resident with B and contracts with A to provide transport services to B, there are imports of transport services from B's economy into A's economy, which are then included in the value of exports from A to B. And then if C contracts with B to transport the goods, this is a domestic transaction again with B's economy, even though C is operating in a foreign territory in collecting and moving the goods. Then in the last case, if C is a resident in an economy other than that of A and B, then the services provided to A will constitute export of services from C's economy to A's economy, and the value of goods exported from A to B are sufficient to cover the cost of imports, just as previously they covered the cost of a domestic transaction. And if C contracts with B to move the goods, then the cost shows as an export of services from C's economy to B's economy. So the point of showing all these cases was to emphasize that there are many factors to consider when evaluating international transactions of goods and services. In the domestic case, the question of whether the value of goods covers the cost of transportation or not depends on whether the buyer or seller is responsible for transport. Again, this is equivalent to whether change of ownership takes place after or before the transportation of goods from A to B. However, in the case of international transactions, it is not so straightforward. Either A or B is non-resident and possibly C also. So the most common situation is where information coming from records of customs authorities is used. And like we mentioned before, in the case of international transport charges, the 2008 SNA framework also recognizes that in most countries, the main data source for exports and imports are customs declarations, which usually record imports using a CIF type valuation. So while it is recommended to add a CIF to FOB adjustment factor to value both exports and imports at FOB. In increasingly complex transactions, the FOB contract may not actually represent a very accurate picture of what is happening. So therefore, we can again take a look at the main issue in more detail. That is, the FOB principle and basic principles differ in their treatment of freight and insurance services or the transport services between the exporting and importing countries. This is because under FOB, goods are valued without considering the cost of transport services between the exporting and importing countries. The goal is to establish a uniform point of valuation that focuses solely on the cost of goods themselves. FOB is a common practice in international trade, which simplifies the transactions by isolating the product's value. Um, Under basic price valuation principle, goods are valued at the transaction price receivable by the producer. So unlike FOB, we consider both the cost of goods and any associated transport services. This valuation method is crucial for accurately reflecting the producer's income and the total value of goods in domestic transactions. So even though the FOB type valuation has long been established in the compilation of BOP and national account statistics at the aggregate level, there are still some unresolved differences in guidance. The application of concepts such as change of ownership, valuation, transfer of risk at the time of recording at um, as per BPM 6 and 2008 are actually tied to the use of customs document as the underlying data source given the widespread availability of such data sources. There are also other factors that require consideration, such as increasing use of non-customs data sources, particularly for economies in a customs union such as the EU. Then there are also practical challenges in bridging the conceptual differences when adjusting the IMTS data to the SNA and BOP data. The need for additional clarifications is also there regarding some of the existing concepts due to emerging production fragmentation arrangements assured by globalization and transactions involving bundled goods and services. It's also important to analyze the reduction in trade symmetries and the continuous evolution of user needs, including the increased demand for information on CIF to FOB adjustment in national supply and use tables in order to create higher quality input-output tables as well. These inconsistencies were also brought to light in 2013, first by Anne Harrison in an IMF paper. Um, it's also recognized that there is not a lot of standard guidance available for CIF to FOB adjustment, besides some guidance provided by IMF and OECD. CIF adjustment, FOB adjustment factors were also discussed in ADB's 2017 Compendium of Supply and Use Tables, which described the diversity of practices regarding the compilation of CIF to FOB adjustment. So, in lieu of these inconsistencies and to resolve the current conflict in 2008 recommendations, that is the internal SNA consistency between valuing domestic and international transactions, and the valuation consistency between 2008 SNA and BPM 6. Different options are considered. The first option proposed changing the recommended treatment of domestic transportation back to the recommendations in the 1968 SNA. In this option, transport services would always be treated as services and never integrated with the value of the good. This option would have the advantage of valuing domestic and international transactions consistently, have a uniform point of valuation, and also align the treatment of transport services in SNA and BPM. However, this option would imply a change in the valuation concepts and methods currently adopted in 2008 SNA, and this would have implications for basic prices, producer prices, and purchaser prices concepts. This would also imply a change in the treatment of transport margin in the adjustment needed in the SUT, in the trade data in SUT framework, and would overall be a step backwards. The second option includes the second option proposes maintaining the recommendation of the 2008 SNA to record imports and exports using an FOB type valuation. This approach maintains the consistency between SNA and BPM in their proposal to value imports and exports at FOB valuation. However, this would not reconcile with the 2008 SNA recommendation itself to value output at basic prices and similar to the valuation of domestic transactions. But if option two is to be considered, the existing materials would necessitate additional clarification concerning areas such as availability of source data with different valuations to estimate imports and exports of goods in different countries, and the best practice to estimate CIF FOB adjustment, and data sources to estimate transport services accurately, and it would also require further guidance on treatment of goods under merchanting and goods sent abroad for processing. Then the third option and the last option proposed, changing the SNA recommendation for the valuation of imports and exports to the observed transaction value. This approach would have the advantage of enhancing the consistency within the SNA with the general valuation principle of recording output at basic prices. However, this would result in an inconsistency between 2008 SNA and BPM 6, since BPM 6 recommends using FOB valuation for imports and exports. This would also imply changes in the treatment of international transport margins uh, in the adjustment needed to trade data in the SUT framework. The written consultation with the GZTT, or the Globalization Task Team, has shown that most members favored option 3 at a conceptual level. In the current guidance, FOB valuation is considered at the customs frontier of the exporting economy. Therefore, all freight costs up to the customs frontier are recorded as incurred by the exporter, and all freight costs beyond the customs frontier are recorded as incurred by the importer. When arrangements for payments of freight costs are actually different from the FOB terms of delivery, BDM 6 recommends the rerouting of freight services, which implies creating a separate entry for transport services, which may also imply that transactions that are actually between two residents are treated as between residents and non-residents, or vice versa. So in the proposed approach to account for actual transaction or invoice values, there are several benefits, including avoiding the effort of compiling the complex CIF FOB adjustment, which may introduce additional measurement errors due to lack of source data. And additionally, this approach would reduce asymmetries in data, as it would entail a unified assessment of transactions between importers and exporters. But this approach would also require changes in both the SNA and the BPM to keep the consistency between these international standards. We can also illustrate the complexity of a CIF FOB adjustment through examples to show how it would be recorded in the supply table when the import of goods is available at CIF value. It should be also noted that similar complexities occur when applying the accounts to FOB adjustments. So for this case, consider an example wherein a piece of equipment costs 10,000 units at the factory at which it was produced in country A. It costs 200 to transport it to the customs frontier of country A, 300 to transport it from the customs frontier of country A to customs frontier of country B. That will be the cost per ship, and it costs 100 to deliver from the customs frontier of country B to the actual consumer. The merchandise trade in goods statistics will report an import value on CIF basis of 10,500, whereas the export value on FOB basis would be equal to 10,200. For simplicity, it is assumed that all transportation from the premises of the seller in country A to the buyer in country B is supposed to be carried out by one carrier, which could be either resident or non-resident, which simply means that we assume that the transport from the seller to the border of country A, the shipment and the transport of goods from border of country B to the buyer is done by one single carrier. So, of course, in reality, several carriers which are resident in different countries may be involved in transportation activities. And it is too simplistic to assume that transport is carried out by one single carrier. But the point that we're trying to prove here will not be affected by such considerations. So, these considerations will not disturb the complexity in the measurement that we're trying to show here. So we consider the example from the perspective of country B, wherein the first situation is that the trading parties contract on an FOB basis in reality, that is the invoice price is 10,200. The exporter is responsible for transport costs up to the frontier of A, and the importer is responsible for all subsequent costs. So within this situation, we consider the case that the carrier is resident in country B. That is, the carrier is the same resident as the importer. So in terms of actual imports of goods, that is in the first table, the buyer in country B is buying $10,000 worth of goods from country A. However, as you can see in the second table, the CIF import value available from customs will equal 10,500. The FOB contract implies that the invoice of transport services is being split between the exporter and importer. That is, the exporter bears the cost of transport in their own economic territory, which are 200, and the importer bears the cost of shipment of 300, and the cost of transport from port to own premises, that is 100, totaling to 400. So based on an FOB contract, the carrier is expected to report an export of 200, as you can see in the third column, which corresponds to the transport costs in country A payable by the exporter. This is recorded to offset the double counting of export services within the country A, that is the seller's country. So in this case, the trade balance based on a CIF recording, that is, if you see column 2, will be understated by 300. This discrepancy results from the transport costs from A to B, which should not be a part of import. These transport services are already included in the CIF value of the imports, but are delivered by a resident carrier since the carrier is a resident in country B itself. To obtain a consistent balance of trade, a CIF recording would require a fictional entry of import of services of minus 300. So as reflected in the third column, the actual transaction, if we use the actual transaction, that would have provided a more consistent picture in terms of what is actually going on in terms of imports of goods and services. In the second case, we look at the scenario where trade is still happening on an FOB basis, but this time the carrier is not resident in country B. As $200 of transport costs to transport goods from seller to border of country A is already included in FOB price of goods, we may expect that accordingly an additional $400 of transport services show up as services imported in the trade statistics of country B. In other words, under the CIF valuation given by customs, the importer will report an import of transport services of 400, which corresponds to the transport costs bridging the borders between countries A and B, as well as the transport in country B itself. Also, in this example, initially the CIF recording in the supply table causes the balance of trade to be understated by 300 again. The importer reports an import of services of 400, but the transport costs from A to border B are already included in the CIF valuation of goods. So a CIF recording, therefore, if you see if column 2 was considered, would require an fictional adjustment of service of trade import, fictional trade import adjustment of 300. This is also, then if we see the third column, the actual FOB contract price, if that was recorded, would give a more consistent picture. So in the second example, we see what would happen if the trading parties are engaged in an ex works contract instead of an FOB contract. This implies that the invoice price would be 10,000 and the importer in country B pays separately for all transport from the seller's premises to its own premises. This example again is elaborated from the viewpoint of importing country B, and we first consider the situation that the carrier is resident in country B. The merchandise trade statistics of country B would show a CIF recording of 10,500 to be included in the supply table. As this case assumes that carrier is resident in country B itself, no additional import of services is being recorded. In the case of an ex works contract, a CIF recording of goods leads to an overstated trade balance of 500. Again, this recording requires an imputed fictional export flow of transport services of 500 to counterbalance this inconsistency. Again, in this case, the preferred recording would be on the base of an actual contract as exposed in the third column, and that is limited to trade in goods only. The trade balance will not include the recording of services as the carrier is a resident and no export or import of services is actually taking place. Then in the fourth case, we assume that the contract is still on an ex works basis, but this time the carrier is a resident of country A. So this implies that B is not only importing goods worth of 10,000, but it's also importing services from A's carrier worth 600, which includes the cost of transport from seller to the border of the seller country, that is border of A, the shipment from A to B, and the transport in B, that is transport from border of country B to the actual buyer. The X-Works contract leads to a separate recording of all transport services of 600. As a result, the CIF recording of imports of goods in the supply table will again lead to an overstated import of 500. This amount corresponds to the transport services included in the CIF value. The CIF recording requires a counterbalancing, recording the import of services in the same amount of 500, which is not actually happening in reality. So from these examples, we can actually draw the conclusion that the actual transaction price provides a more consistent picture of international trade. The required imputations in the trade of services require information, especially on the residency of the carrier and other service providers that are involved. And this information may not be readily available from just customs data. The examples also show that recording of goods at actually observed transactions value is expected to be more consistent with the recording of corresponding trade flows or corresponding trade service flows that are actually taking place. Without information on the residency of carrier, the proper imputations cannot be made, and a CIF FOB recording will actually diverge from the transactions value and might lead to mistakes in the trade balance. Therefore, the third columns that we saw in each of the previous four examples illustrate a consistent recording based on the observed FOME or ex works transactions between the two parties. So therefore, several advantages can be seen of using transaction values. So as no estimates are needed, we can avoid trade asymmetries caused by the current estimations. The data can be directly extracted from companies' accounts. The data requirements would for compilers are reduced since no additional information is needed to estimate. The compilation of transportation would be disconnected from the international merchandise trade statistics as weights and terms of delivery would no longer be needed. Data could also be combined with merchandise data following the country of origin and the country of consignment concept. The invoice concept would also better fit in with other components which are relevant in the case of trade or for international transportation, like processing and merchanting. And the invoice approach overall would be better in alignment with the current recommendations of the 2008 SNA regarding the valuation of goods and related transportation services inside the economic territory. However, a practical implementation of the transaction approach has a lot of complications for compilers, respondents, as well as data users. For compilers, it is quite obvious that the lack of access to invoice values or corporations' records will create difficulty in switching to transaction values. The need for additional data to estimate transport and insurance services is also there, wherein direct surveys might be needed to collect data to estimate these activities. The residents of freight or insurance providers may not be known simply from custom declarations, which again would necessitate additional surveys. There would also be difficulties in the classification of goods and services and in establishing the residence of the corporations. There may be cross-country asymmetries in the available data, and this would also imply the need for additional standardized quality control measures and legal and institutional arrangements to ensure consistency of evaluation. From the perspective of respondents, there would, of course, be an increase in the respondent burden in case of unavailability of invoice data from customs. And considering the large number of monthly transactions, the data collection through surveys might be a resource-consuming task for respondents. And lastly, for the actual users of data, there would be additional costs associated with adapting to the new data. From a practical perspective, retrospective estimations are unlikely, and therefore the use of new valuation principles will lead to a structural break in the time series. And additionally, compiling agencies will have to communicate the changes to the data users to ensure confidence in the new trade data. So therefore, while the solution is quite simple, the implementation is a lot more complex. The Joint Committee and the Advisory Expert Group convened in October 2021 to discuss this issue and concluded that for the purpose of 2025 SNA update, option two, that is continuing the valuation of exports and imports of goods at on FOB basis should be retained. This doesn't mean that transaction values are not going to be used in the future, which is why it's being viewed as more of a long-term solution, and it's being recommended to already keep in mind to underscore clearly in the revised text of the new manuals that option three, that is valuing exports and imports of goods at actual transaction values, will be the standard in the next round of BPM and SNA updates. They also indicated that economies should be encouraged to already start taking steps and to start collecting the information, as well as undertake the testing of this approach before the next update. And it was also agreed to explore further the collection of invoice values as part of the IMTS itself. This will enable assessing the quality of invoice values over time and ensuring that economies switch over to the next change in standards as soon as possible. For in this regard, the World Customs Organization may also be consulted on whether existing custom regulations can impose mandatory recording of invoice prices in customs declarations and whether the compilers can get access to that data. So, in conclusion, and to summarize what we discussed so far, the overall SNA guidelines follow the basic price valuation output principle. Um, in the case of domestic trade, the valuation is consistent with the principle the of valuation at basic price valuation of output, as the actual transaction data is available from business surveys conducted among domestic enterprises. However, the SNA follows the FOB valuation principle when it comes to valuation of imports and exports as the main data source um, when it comes to imports and exports. And this comes from usually customs declarations, which value imports at CIF and exports at FOB. The SNA follows the FOB valuation principle primarily to maintain consistency within SNA for valuation of imports and exports and to provide a uniform measure of trade between economies. And lastly, this valuation is also consistent with the recommendation of DPM 6. However, since the customs data values imports at CIF and FOB, and FOB CIF at FOB adjustment factor is needed. But the information obtained from merchandise trade statistics to adjust transaction values to CIF FOB is generally of low quality, and the corresponding adjustment in trade services cannot be made without information on the residency of the carrier providing the transport services. And also on the actual terms of delivery that exist between two contracting parties. So in this regard, it is proposed that recording of goods at the actually observed transaction values is recommended. And this is expected to prevent further inconsistencies in the recording of goods and services trade flows. This approach has advantages of alignment with the basic price valuation principle of SNA. It also reduces data asymmetries and eradicates the need for CIF FOB adjustment. However, as we discussed before, the lack of access to detailed invoice data continues to remain a problem. So this concludes the presentation on the valuation of exports and imports of goods. These are the main references that I used for compiling this presentation. Of course, the main reference is the guidance note on valuation of exports and imports of goods, which is available on the UNDESA website. I also used a paper for showing the examples of CIF FOB recording. And of course, to reconcile the differences, I used the 2008 SNA manual. So that's it. Thank you so much. Let me know if you have any questions or concerns or clarifications. Maybe we can take the questions after Mon's presentation, just in the interest of time, since it's already 12:30. Mon, would you like to go ahead? Also, please
Yes,
feel
sure.
to yeah, sorry, please feel free to add any questions in the chat box in the meantime. That's all. Thank you so much. And over to you, Mon.
All right, everyone. Good afternoon. Is everyone able to hear me and see my screen?
Yes, Mon.
All right. So I'll begin my presentation on the framework for determining the informal economy that is recommended in the 2025 SNA. So as new informal types of economic activities are emerging globally, policymakers are giving more and more attention to informal productive activities that provide employment and income and thus affect the economies. So, although associated with lower and uncertain income for workers, it would be necessary to quantify and account for such informal activities in order for policymakers to craft policies to assess the impact of such activities and implications on poverty in this age when there are more people that resort to jobs and opportunities that are not formally recognized. Right? So before we delve into the framework, there is a need to delineate or differentiate the informal economy from the non-observed economy. So they are not necessarily the same, but they do have some overlaps. On the right, we see a Venn diagram from the SNA 2008 framework. Okay? So the non-observed economy, or NOE, includes economic activities that, for various reasons, are not captured in regular statistical inquiries. So it's a pragmatic term that describes activities that are not regularly measured and included in the SNA. Therefore, the types of activities under this would may vary between countries or economies. So it is used more in the context of achieving exhaustive or complete statistics or comprehensive statistics. So the frameworks for the on the non-observed economy would provide tools to exhaustively include production in the informal sector, illegal production, underground production, household production for own final use, and other production that is not covered due to deficiencies in the data collection program. And this also depends on the economies. So many countries that use these frameworks may not publish details of their adjustments or nor an overall measure of the non-observed economy because it would be hard to measure. Okay, so the informal economy and the non-observed economy may have considerable overlaps, but each would include elements not included in the other. So an important example is undeclared and underdeclared production of registered economic units. This is not part of the informal economy, but it is highly relevant for the non-observed economy. And the main difference between the two frameworks would be the purpose. So the purpose we're looking at in developing a framework for the informal economy is to ensure consistent measures for informal production and informal labor inputs. So for in defining the informal economy, it's important to formalize economic units and to decrease the vulnerability of informal workers. So it is therefore not primarily a tool to achieve exhaustive measures of production like what the framework for non-observed economy does. Okay. Right. So now that we have that out of the way, we have to establish first what informal econ or how the informal economy is defined in the 2008 SNA. So it is a breakthrough. We found a breakthrough in the 2008 SNA in that the statisticians has established a connection between work in the informal economy, informal sector, and the integration of both informal sector in the national accounts. So it is seen in the 2008 SNA, paragraph 25.1. It says that no economy is completely regulated and captured perfectly by statistical inquiries. Steps have to be taken, therefore, to attempt to cover unregulated activity and survey imperfections as special exercises. There are two approaches that, although share a lot of common ground, are directed towards two rather different goals. The first, highlighted in blue, is to ensure that all activities, including those that may be described as hidden or underground, are encompassed in measures of total activity. And the second is to define what is meant by the subset of economic units that can be considered informal and to measure this. Okay? So the rationale for the first, and this is also explained in the 2008 SNA, is to ensure that is to achieve rather a complete view of the economy that is comparable over time and across economies. While the goal for the second recognizes analytical importance of being able to measure activities that reflect the efforts of people without formal jobs to engage in some form of monetary economic activity. And in the 2008 SNA, this group of people will be described as belonging to the informal sector, right? Um, However, neither the 2008 SNA nor the ILO resolutions provide statistical recommendations or a comprehensive framework for the informal economy. So this guidance note on the framework for measuring the informal economy aims to present a consistent and coherent set of statistical concepts and definitions relating to the informal economy across all statistical data sets. So in particular, this would be your national accounts, even external sector statistics and labor statistics that are acceptable to labor statisticians and macroeconomic statisticians. Right? And this is why there is a need to update this standard or these definitions and descriptions in the 2008 SNA. We know that there are new informal types of economic activities that are emerging, that are also creating new jobs that could be characterized as being less formal or even informal in nature. And informal production activities do provide employment and income to many people who might otherwise be unemployed or employed informally. So these are often associated with lower and uncertain income for workers, so no stability and no security of tenure, since such informal workers are less protected against negative economic shocks. This may have broader consequences for inequality and poverty. Which is why it's such an interest for policymakers as well. And the quantification of the informal economy and the data on its characteristics are needed for designing, implementing, and monitoring and analyzing macroeconomic and social policies and to assess their impact on poverty. So what will change in the 2025 SNA? So the update from the 2008 SNA considers an increased focus on household production of services for own use as part of the work to better reflect well-being issues in the SNA and other supplementary presentations. So since this type of household production is typically not covered by formal arrangements, it should be reflected in a complete framework for the informal economy. Okay. So on this guidance note, the ILO has been working actively on developing statistics on informality. Their work has led to the adoption of standards for defining the two main components of the informal economy, namely the informal sector and informal employment, which are also different from each other. Right. So now we delve into this proposed framework introduced in the SNA 2025. Okay, so this guidance note provides a presentation on the proposed statistical framework on informality, focusing on the perspective of the economic unit and its relation to informal productive activities and the informal economy. Right. So let's define first informal productive activities. This is the box in blue. So this set of activities can be viewed as an underlying concept that contributes to a comprehensive framework, which is your informal economy, recognizing the two highly linked but also slightly different perspectives of informality. This would be number one, the perspective of workers or the informal labor inputs, and number two, the perspective of economic units or informal production. So the informal productive activities, this term or this concept provides an encompassing conceptual foundation from which the different statistical concepts are derived and points towards which statistical components should be statistically quantified and described. Okay, there is a difference between the two such that inputs would describe partly a worker's type of employment, and if this worker is providing or contributing informal labor inputs, but is employed in a formal setting, it means that such inputs are not covered in formal arrangements. As for informal production, this would refer to the type of the establishment or economic unit providing productive activities. And we move over to this bigger umbrella here, which is the informal economy. This is an overarching concept defined as constituting all informal productive activities carried out by workers or economic units within the general production boundary. So before we delve into the framework itself, let's clarify some terms and differentiate some terms because we'll be using the word informal a lot in this presentation. So let's start with the informal economy. Again, this is defined as constituting all IPAs or informal productive activities that are carried out by workers or economic units within the general production boundary. And this would include your informal sector production, informal household own use production of goods and services, and labor inputs that are used to undertake these types of production, as well as the informal labor inputs in the formal sector. So informal sector production would refer to if there is a type of market a non-market production, a component of these types of production would fall under informal sector production, depending on the type of labor inputs and the type of establishments that produces such these goods and services. Informal household own use production would be production by households that are not registered or not recognized, as perhaps they are not paying or being not recognized under tax regimes. So they would produce goods and services mainly for their own consumption or own final use. So own informal sector production, this is a long sentence, so please bear with me, would include all household production of goods and services whose sale, distribution, and possession is not forbidden by law and not illicit, not illegal. That is mainly intended for the market, so this is for market production, and is undertaken by unincorporated household enterprises that are not formally recognized by government authorities by not being registered for tax or similar purposes. So an example of this would be households producing food items for sale to the public for the market, but the household or the household member selling is not incorporated nor registered for tax. Number two, informal household own use production would consist again of still unregistered household production whose sale, distribution, and possession is also not forbidden by law, but is mainly intended for own final use. Okay, but there are exceptions here, except for housing services of owner-occupiers, and that is undertaken by using the labor inputs of household members or informal domestic employees. So an example of this would be agriculture farmers who practice agricultural subsistence. So they grow their own food. They grow the fruit for their own or for family consumption, and this is produced by the household members or other farmers that are informally employed by the household. Okay, so the difference between the two would be to whom the production is offered. So the first one is for the market and the second one is for themselves, for own use. Okay, but the similarities holds that they are both household production. Both groups are unregistered, that's why they are informal, and both are not forbidden by law. So both are still, of course, legal transactions or legal production, forms of production. Finally, the third component under informal economy would be your informal labor inputs in the formal sector. So these would include labor inputs of workers that are in informal employment, not registered, unpaid trainees and volunteers in informal work arrangements, so not paid. So the difference between the two is workers in informal employment are compensated. The second group would be unpaid trainees and volunteers. And lastly would be all informal labor inputs of formal employees. So meaning they have formally been contracted or employed, but they are undertaking the production of goods and services um, by, by using informal labor inputs. Okay, so it's possible that they are doing other types of work that require informal labor inputs and are not paid for or not registered or recognized, but they are employed. Okay. Let's also define the term sector. So this is the definition of a sector here. This is mainly taking the definition of sector in the ILO. This is not consistent with the meaning in the SNA. So we take the sector here as an institutional unit and not like a productive sector um, like manufacturing and so on. Number two, informal sector versus informal economy. So we have distinguished between the two. Sector is under the informal economy. It's only a component. And for formal sector, informal economy, similar concepts for the formal sector, informal economy have not yet been introduced or defined, since there is really no need yet to differentiate between the two, and it is not relevant, at least in the guidance note, in helping out or in defining the informal economy or in building a framework for the measurement of the informal economy. Hence, there is no analogous framework defining the two or differentiating the two. All right. Now let's delve into the framework. So the framework first assigns economic units into three sectors. Again, sectors are institutional units here. Okay. So we have to identify first the type of informality existing in each institutional unit or sector. Okay. Let's go towards the formal sector first. So this group would include all non-household economic units that are assigned to the formal sector, as these economic units are formally recognized as producers of goods and services, regardless if these are market producers or non-market producers. So the market producers under the formal sector would be your non-financial and financial corporations and some households. And your in the non-market producers in the formal sector would be your general government, most of your general government, and then your NPISH. Okay? Households can also belong to the formal sector. So they are assigned if they undertake production through a household unincorporated market enterprise that is registered for tax or similar purposes and is therefore formally recognized as a producer. Okay, so the main difference really between an informal and the formal sector is that the formal sector encompasses economic units that are formally recognized and registered for tax or similar purposes. Okay. Informal sectors, so there are households here that are assigned to the informal sector as long as they undertake production through a household unincorporated market enterprise that is not formally recognized by government authorities by not being registered for tax or similar purposes. And then we have the household own use production sector. These are also households that produce goods and services, but these goods and services are mainly intended for own final use and are assigned to the household own use production sector. So what they produce is what they consume. In a second step, the framework identifies the productive activities that are informal and thus part of the informal economy. So again, your informal productive activities, IPAs, comprise informal production and informal labor inputs. So these three sectors, and they're linked to informal work or labor inputs, and the SNA and general production boundaries will be shown in the following slides. But in case you are concerned or curious about what a household unincorporated market enterprise is, so we have a quick definition here. They are market enterprises that are created for the purpose of producing goods or services for sale or barter, therefore representing resident households that are producing goods and services mainly intended for the market. So this is the example I shared earlier of, for example, households or members of households, but are not incorporated, that would sell items in the market. Okay. They do not have a complete set of accounts, and it would not be possible to separate all assets down into those that belong to the household in its capacity as a consumer from those belonging to the household in its capacity as a producer. Okay. All right. So in case there are still any confusion on the definitions, so I'll just go through these quickly. The formal sector, first and foremost, would include economic units that are formally recognized. So examples would be your financial or non-financial corps, quasi-corps, government units, NPISH and household unincorporated market enterprises. For brevity, let's just call them household enterprises that must be registered for tax or similar purposes. All types of production are formal, but their labor inputs may comprise of formal and informal inputs. So here we see the difference between your informal production and informal economy and informal type labor inputs. So even though we have a formal sector, um, although their production, the types of production or the goods and services they produced are informal or formal in nature, the inputs or the people employed to produce such formal types of production may not all be formal. So we have some unpaid trainees, volunteers, people or workers that are not recognized. But the data on informal labor are compiled on a labor statistics perspective. So this number may not be complete, but at least there should be efforts to determine the informal labor inputs comprising your formal sector. Okay? So independent workers in the informal sector are in the formal sector are formal workers. Dependent workers in employment can be informal. And formal economic units also can use informal labor inputs for production or employ quote unquote informal labor. And these labor inputs, these informal labor inputs are part of the informal economy, right? Um, we move on to the informal sector. So the informal sector is a subsector of the household institutional unit or sector and comprises all household enterprises that are not formally recognized by government authorities because they are not registered for tax or similar purposes. So examples would be your agricultural production of household enterprises as long as they are not formally recognized. Um, In addition, the size of an enterprise this should not be considered as a criterion to classify unincorporated household enterprises as informal. So, for example, micro or small enterprises are not necessarily part of your informal sector, though one could argue that a large component of your micro and small enterprises could be part of the informal sector. Um, there is also a departure from the operationalization of the current definition of the informal sector in the ILO. A single household can carry out more than one type of production activity as well, intended mainly for the market that is not registered for tax or similar purposes, which are to be identified as separate informal enterprises if feasible and relevant. So similar to what I discussed here in the formal sector, there would be some unincorporated household unincorporated market enterprises that perhaps are producing goods for the market, but are using informal labor. Okay. So when it comes to the type of production, um, all types of production are part of the informal economy. However, as for labor inputs, all workers engaged in informal enterprises are informal workers. So all labor inputs are informal. So apologies for this. This is wrong. Labor inputs must be informal, of course, since we're talking about the informal sector. Okay, so the key difference between the two, although we can think of formal sector and informal sectors as the opposites of one another, for formal sector, all types of production are formal. For informal sector, all types of production are informal. But for the formal sector, all labor units, part of the labor units can be informal. But for the informal sector, all labor units are informal. Finally, we have the household own use production sector. So this includes all households producing goods and services that are mainly intended for own final consumption. This would include as well the production of informal or temporary NPISH as well as direct volunteer work. Okay. Another example we include here is agricultural subsistence, or like fishing for your own family, fishing for your own consumption, planting, cultivating animals for your own consumption only, not for market use. So the household own use production sector extends actually beyond the SNA production boundary by including the production of services by households for own use, direct volunteering and services provided or produced by informal NPISH. So in terms of the types of production, housing services of older occupiers are by convention excluded from the informal economy, as no informal labor inputs are used for this production activity. So when it comes to informal types of production, the examples falling under informal type of production would be your direct volunteer work and the production of informal or temporary NGOs or NPISH. As for labor inputs, again, there is a distinction between formal and informal inputs. So if the unit is registered, then it is a formal, it would be part of, it would have formal labor inputs. If informal or a temporary NPISH, then this would, they would be under informal labor inputs. Right? So the second step after sort of assessing what type of sectors your activities belong to, there is a need to determine the productive activities of households now. So households undertake different types of production activities that need to be separately evaluated to be considered as part of the informal economy. So we have such examples here. For example, when we talk about providing free childcare services to neighbors, this would be part of your informal economy because the production of direct volunteers is part of the informal economy. Another example would be living in a home that the households own and thus producing housing services for own final consumption. This is not part of the informal economy. This is part of own final consumption activity. For example, you formally employ a gardener. So the production undertaking using the labor inputs of the gardener would be excluded from the informal economy because he or she is in formal employment and is recognized by the government. Let's say you informally employ a cook at your home. So the production undertaking using the labor inputs of the cook are part of the informal economy because the cook is not registered or recognized. Let's say household members provide full-time childcare in children living in households, then since if they are required to register their childcare services, then this would be part of the formal economy and not in the informal economy. Okay. And so on. So these are just a few of the examples. So for analyzing the informal economy, it may be helpful to separately identify the production of services by informal or temporary NPISH and direct volunteer work, as well as other informal production of services by households that is undertaken without engaging domestic employees. Okay, so for ease of understanding, we can summarize what you've discussed so far through the framework provided in the next slide. Right? So we have a framework here and scope of your informal economy. So we define first the informal productive activities. Okay? Remember that your informal productive activities are comprised of your informal production and informal labor inputs. Okay, so we have three sectors: your formal sector, informal sector, and household own use production sector. The first step is defining which sector such activities fall into, and the next step is defining the activities as comprised as being part of part of the informal economy or not. So under the formal sector, as I also mentioned earlier, there are no informal productive activities here. The type of production is always formal. However, the guidance note also notes that there are informal labor inputs that result in formal production. So in order for these inputs to be part of formal labor inputs, they must be engaged by formal sectors or institutions. Okay. So the type of labor inputs for pay or for profit may include informal employment or informal labor inputs. Also, for not for pay or for profit, there may be some informal, unpaid, and volunteer work under formal sector. As for the informal sector, so your productive activities would comprise of production of informal household unincorporated market enterprises and all labor inputs used to undertake this production. Of course, all labor units would be informal here. Okay, so in this framework, there are no formal inputs, labor inputs included here because we're only concerned in looking at the types of informal labor inputs included. So as per household own use production sector, there are two types of productive activities. We have household production engaging informal domestic employees, and unregistered household own use production, including informal and temporary NPISH and direct volunteers. So for pay, then there is informal employment. For not, if there is no pay, there is informal volunteer work and own use production work. And now we relate these to the SNA production boundary. So um all types of sectors would fall under the SNA production boundary, except for the portion of your household own use production sector that provides services for own use or by temporary NPISH and direct volunteers. Okay, if we link the three sectors, so we can look at this framework here. So we have now we look at your at more specific types of units. So we have your non-financial and financial corporations, which are market producers. We have general government, which are non-market producers, NPISH, non-market producers, and households who are partly market producers and who produce for their own consumption. Okay, if you're not familiar with the difference between market producers and non-market producers, the only difference is that your non-market producers, such as government and NPISH, they provide services and goods for free or at insignificant, um, very insignificant prices. Okay, so this would be of government services for the communities or NPISH services and goods for the community. So the type, whether they're market or non-market, has nothing to do with their formality or informality. Okay, so that you're not confused. So in terms of operational definition, you can just take a look. So of course, your corporations would be either incorporated and would have a complete set of accounts. Governments would always be formally recognized, of course. NPISH, they can be registered, some of them perhaps not. Households may be registered or they may engage in formal employees. There are also households that are not registered or may not engage formal employees. Okay, so for own use production, those who provide housing services for owner occupiers, they are never informal. Um, those um, those who the production of households for own use with employees, for here, production is informal only if the employees are informal employees. Okay, and we have direct volunteers and temporary NPISH as well. So all of these groups, except for this last one, are within the SNA production boundary. Okay, and then we have the delineation on the sector of the economy. So non-financial all the way to households that are registered are part of your formal economy, highlighted in orange. We have the informal sector, these are unincorporated household enterprises that are not registered and do not engage formal employees. And then as for own use production, they are household own use, they're part of the household own use production sector. Now, when it comes to productive activities that are part of the informal economy, the only portion of your formal sector that would have links to the informal economy would be your labor inputs. So if they employed non or informal labor, then those informal labor inputs would be part of the informal economy, which is your informal sector plus informal labor inputs plus informal activities. As for the informal sector, yes, both productive activities and inputs are always informal. As for own use production, um, both production and labor inputs of employees or households are informal only under this group. And for this group, those who produce for own use without employees, including your informal and temporary NPISH, both production and labor inputs would be part of your informal economy unless the production type is registered. So perhaps just to highlight everything, your informal sector would comprise of this. Okay, half or like a portion of your formal input that are portion of informal inputs in the formal economy, all your informal sectors, apologies for the bad highlighting, and then this portion here for own use production. Only if the employees are informal and the activity or the employees are not registered. Okay, and everything else would not be part of your informal economy. So I hope this is clear so far, even if I colored it badly, right? Okay, another diagram here shows a decision tree. So this is part already, both or all rather, all diagrams and frameworks here are part of the SNA 2025 recommendation. So if we look at an economic unit, let's just focus on households here for a while. So we have a household. Let's say that its production is not mainly intended for the market, so it would be part of the household own use production sector. But recall that a portion of this would be also part of your informal economy. So let's say that the household the goods and services are housing services of owner occupiers. That would not be part of the informal economy. So we cross this out. If the goods and services are for own use production, it depends on the types of employees that are included. So if you employ informal employees, then it encompasses household production with informal employees. So this is a check, part of your informal economy, because it means that they are informally employed. If this household who produces for its own has no employees and is not registered, then it's part of the informal economy. Okay. But since it has no employees, its own use production work, so it's part of the informal labor inputs, not for pay or for profit. As for formal employees and registered employees, they're all both part of your formal economy. So going back to your household owned production sector, instead of having instead of the other two or the first two types of activities, they are involved in direct volunteering or informal NPISH. They are part of the informal economy due to the nature of their production as well as the nature of their input. So the informal labor input here is not for profit. So they are not earning. Okay? And then when we go now to households who produce mainly intended for the market, as long as they are not registered, they are part of the informal sector. So their production is an informal type of production. They are informally employed, regardless if they are paid or not paid. Okay, and everything else, as long as you are registered, you belong to the formal sector. For other SNA institutional sectors like your corporations, quasi-corporations, government, NPISH, yes, government, yes, so all other market and non-market producers can belong to the formal sector if they are registered. If they have if they employ formal types of labor input, then it's part of your formal economy. But if not, if there are particular activities or particular services and goods provided through the employment of informal labor units, then it's part of your informal economy, right? So I hope, again, this clears it out. Right. So that actually ends the framework. There would be other issues to consider now, because that would mean that there would be activities or new phenomena across the world that would need particular attention to because of the nature of because of a lack of framework encompassing informal activities and informal production in these sectors or in these activities. So let's talk about illegal activities first. in the 2008 SNA, it states that illegal actions that fit the characteristics of transactions that are treated illegal. These are illegal actions that fit the characteristics of transactions treated the same way as legal actions. So the production or consumption of certain goods may be illegal, but market transactions have to still be recorded in the accounts. That is why they have to be treated the same way as legal actions. Okay. Thus, some illegal activities fall within the scope of production and that they satisfy the characteristic that there is still mutual agreement between the parties. There is still a transaction. And if the purpose is to generate income, then the illegal nature of the activity may not be a precluding factor. There are two kinds of illegal production that are described in the 2008 SNA, particularly in paragraph 6.43. There is number one, or letter A, the production of goods and services that is forbidden by law. Okay. Number two, or letter B, production that is usually legal but becomes illegal when carried out by unauthorized producers. Okay. So most illegal productive activities would be part of the informal economy if the principles of informality are applied. However, from a policy perspective, the aim, of course, the ideal scenario is to eliminate, eradicate, and stop the production of illegal um, or of goods and services whose sale, distribution, or possession is forbidden by law. So while such information on informal productive activities would be used for policy goals, um, it is not necessary that, again, since the goal is to eradicate such activities, this would be excluded rather from the discussion on informal economy. Okay. Because from a policy perspective, it could be argued that there is an incentive to transform production that is usually legal but becomes illegal when carried out by unauthorized producers. Similar to transforming the informal production activities into formal production arrangements. So there's, on the other hand, for letter B, there is no need to exclude such activities because in the event that such activities become legal, it would still matter for us to assign them between the formal and informal economy. But for this letter A, this would be excluded in the informal economy. Okay. So therefore, type A are by convention excluded, and statistics on informality should be supplemented with measures of this type of illegal productive activities. The production of informal production units of goods and services that are usually legal but become illegal, as in letter B, should be included in the informal economy. Okay. Number two, second issue to consider would be your dependent contractors. They actually constitute a new employment status category introduced in the revised International Classification of Status in Employment, or ICSE 18, adopted by the 20th International Conference of Labor Statisticians. Dependent contractors have contractual arrangements of a commercial nature, but these are not contracts of employment to provide goods or services for or through another economic unit. So they are paid by commercial transactions. They do not have an incorporated enterprise. They are usually responsible for arranging their own social insurance and income tax, and they do not employ one or more persons as an employee. Operationally and or economically, they are dependent on another entity that exercises control over their productive activities and directly benefits from work performed for them. They may own or operate unincorporated household market enterprises. So again, they do not have any incorporated enterprise, but may own and operate unincorporated household market enterprises. So if these market enterprises are formal, meaning they are registered, then they belong to the formal economy. Or if these dependent contractors are not registered, then they belong to the informal economy. Okay. Third issue would be digitalization. So digitalization, as we know, has penetrated many aspects of economic activity, and the rapid pace of digitalization has led to concerns about any possible mismeasurement of economic activity. So there are new types of activities that are arising, creating also new types of jobs that could be characterized as being less formal or even informal in nature. Um, so most new forms of dependent contractors are facilitated by digitalization, um, are dependent on large formal enterprises that provide a digital intermediation service. So this ties to the formal economic unit that exercises control over their productive activities, but they facilitate some formality for the dependent contractor. So digitalization would also facilitate some household participation, um, in production activities through digital marketplaces. But what would constitute a household enterprise being part of the formal or informal economy when it comes to digitalization would be um, whether the household enterprise is registered, and of course the types of goods and services or the purpose of joining such a digital marketplace. So, for example, if the household provides services and goods, it would have. Sorry, if the household provides goods and services, then it's likely that it can fall within informal economy depending on its registration. Is it incorporated or unincorporated? So if unincorporated, it could fall into informal economy. Is it mainly intended for the market? If it's for own use, that's a different sector. But there's still an informal component. But if it's for not, but it's if it's intended for the market, then as long as the entity or the enterprise is not registered, then this household entity would fall under the informal economy. Okay. More so this has not yet been very much delineated in the guidance note, and it is also out of scope to make recommendations which household activities facilitated by digitalization should be considered production. So it would fall under a different guidance note. Okay. Another issue would be informal cross-border flow. So they're actually a leading cause of imperfections in external sector statistics is the omission of transactions that are outside the scope of regular statistical inquiries and data collection systems. Some of these omissions may be related to activities in the informal economy, um, undertaken by formal enterprises with informal labor inputs. And these are not captured by statistical data collection systems. So an example here is merchandise trade statistics and customs not being able to cover shuttle trade undertaken by unincorporated household enterprises. Okay. So although they could be included, the merchandise trade statistics of some economies may also not cover international trade and mobile assets. Um, that are undertaken by informal enterprises. Okay. So illicit activities, do not get confused, are not considered part of the informal economy here. Okay. Um, And more on this, these informal cross-border flows would pose challenges to data collection as they represent transactions undertaken by really small units and households that may not be covered by regular data collection programs used for external sector statistics. So, for example, in small or Pacific economies, we have some trade or imports and exports of smaller goods with their neighbors. Since they might be unincorporated, but they provide goods and services to the market they export and import, and they are not registered, then this would fall under your informal cross-border flows. They may be captured by your customs if they record all goods and services passing through, but it would be hard to reconcile um, those that that number from your customs with official data gathered from market enterprises or formal producers. The framework presented here in this guidance note may be expanded and may relate to production, though it relates to the production of the in the domestic economy, it may be expanded to account for external transactions as possible. So, for example, for informal cross-border transactions in goods, both exports and imports, which include shuttle trade and smuggling. Um, if this is done by informal units, then it could fall under informal economy. Informal services, primarily tourism services like room rental and any informal establishments. The growth of online marketplaces for accommodation rental has been growing and has allowed households to provide accommodation services to non-residents. So, for example, Airbnbs. So, as long as they provide such services, accommodation services to non-residents, but they are unincorporated and unregistered, then they might fall under the informal economy. Any remittance is transmitted through informal channels. So workers with no access to formal financial units may use informal money transfer systems. They also may be engaged in informal employment because they do not have the appropriate employment permits. So you can cover these as well. And finally, any income arising from production in informal economy transmitted may such income may be transmitted through formal money transfer channels. For instance, households are increasingly using digital money transfer systems for remittances and other cross-border transactions. So the income derived may generate imports of goods, consumer goods, and imports of services. And the last issue would be illicit financial flows, since we're talking about financial flows anyway. So this should be distinguished from cross-border informal economy flows. Again, illegal does not necessarily mean informal, although there may be a big overlap, or because of coverage, they may not be. Both there is may be a big not similarity, but the overlap between some informal activities and economy flows and some um, illicit economy flows. So the conceptual framework for the statistical measurement of illicit financial flows identifies illicit financial flows, or IFFs, as activities considered as criminal offenses, but also some behaviors related to tax and commercial practices. So this framework, although outside of the scope of this guidance note, would identifies four main types of activities that can generate IFFs. Number one would be tax and commercial activities. Number two, illegal markets, or underground markets, black markets. Three, corruption. And four, exploitation type activities and financing of crime and terrorism. That framework further notes that IFFs can generally emerge at two different stages. Number one is through illicit income generation, which includes the set of cross-border transactions that are either performed in the context of the production of illicit goods and services or generate illicit income for an actor during a non-productive illicit activity. Okay. Second is illicit income management, which refers to cross-border transactions that use this income earned to invest in financial and non-financial assets or to consume goods and services. All right. So again, the important keyword here is non-productive illicit activity. Okay. IFFs are distinguished from illegal transactions. So the latter, illegal transactions, again, should still be treated as legal transactions, and thus they are and must be included in balance of payment statistics. Illicit financial flows abroad may include illegal transactions, but not all illicit financial flows are transactions and those that are not illegal transactions should be excluded from your balance of payments. Okay, because these flows are not derived as a result of these flows that are not transactions are not derived as a result of mutual agreements between parties, as they involve perhaps or very likely an involuntary transfer of resources, like laundering and so on. That actually ends already my presentation. If you'd like to read more about the guidance note, I can send you a link. And so these are the reference. This is the main reference highlighted in blue. And the guidance note has also used a handful of resources and references to um, that have been evaluated and consulted with groups, the IACLS, ILO, and so on. Okay. I think that wraps up our presentation for today. Thank you all for joining. If you would like to take on more concepts or more topics included in the 2025 SNA, we recommend that you do. So there are topics on digitalization, measurement, wellness, financial issues, globalization, communications, Islamic finance, balance of payments, current account, direct investments, and other valuation changes in valuation principles. So we can provide you a link to the list of guidance notes that have been drafted, consulted, and endorsed. Once again, thank you all. And if you have any questions, feel free to let us know. Okay, if there are none, you are free to email us if you have any follow-up questions from our presentations. Thank you all and see you later. Thank you.
Thank you, everyone.